S&P 500 is up 8 consecutive weeks. So will it go up for 9 consecutive weeks? It will be the first time in 10 years if it does. December is still positive, and the S&P 500 is moving toward the all-time high. So will S&P 500 make a new all-time high before the end of the year? And the Nasdaq 100 made a new all-time high last week, and that helped validate the all-time high made by the Dow Jones Industrial. And the Dow Jones Industrial made another new all-time high last week. The market participants are still complacent and showing no fear. Now, the 10-year yield is below 4%. Have we seen the peak in this cycle? Still waiting to see what the Fed saw to cause it to pivot suddenly. Welcome to another S&P 500 and financial market analysis. As the S&P 500 is moving toward the all-time high, we see the small cap, the Russell 2000, have been the top performer for the week and for the month of December so far. On a month-to-date basis, it is up whopping 12.43%, with the second best performer, the Dow Jones Transportation, being up almost 7%. The S&P 500 is only up 4.09% month-to-date, and the Nasdaq 100 is up 5.2% month-to-date. For the year-to-date, the Nasdaq 100 is still the top performer with a gain of over 53% year-to-date basis, and the S&P 500 is up 23.83%. The Dow Jones Transportation is actually ahead of the Dow Jones Industrial. It is up 19.95% for the transportation, and the industrial is only up 12.79%, even though the industrial made a new all-time high recently. Now, the S&P 500 has been up 8 consecutive weeks, as I mentioned earlier, and this is the only second time in the last 10 years. So the question is, will it go up 9 consecutive weeks? And this had not happened in the last 10 years. Now, we saw the Russell 2000 was once again the top performer for the week with a gain of 2.46%, while the Nasdaq Composite is in second, which is ahead of the Nasdaq 100, and that's a change. Usually, the Nasdaq 100 is ahead of the Composite. Now, the Dow Jones Industrial was the weakest for the week. It only gained 0.22%, but it also made a new all-time high along with the Nasdaq 100 for the week. And looking at the sentiment had not changed that much. The VIX is still in the low teen level, finished the week at 13.03, and the put-call ratio is still under 0.75, and it finished the week at 0.73. So the market participants are still fearless and risk on. Now, we did see a broad market decline on the Wednesday liquidation break, but the following day, on the recovery from that liquidation, we did see a bond market recovery as well. We noticed that the up-down volume ratio is pretty positive for the week, other than on Wednesday, and so likewise for the daily advance and decline. So they both show some strong buying pressure and also bond market participation. Now, the number of stocks making new 52-week high is still outnumbered the number of stocks making new 52-week low, and that's a positive sign and showing some strength on the recent upward move. Finally, we did get a confirmation between the S&P 500 and the New York Stock Exchange cumulative AD line. Remember, we were looking at the negative divergence between these two, and we're comparing to the level-to-level basis, but as you can see on last week, we did see the cumulative AD line took out this high here, while the S&P 500 is continuing to move higher. And the key thing to watch now is how is the AD line will perform once the S&P 500 is pushing to a new all-time high. The Nasdaq 100 has also made a new all-time high last week, and the up-down volume ratio along with the daily advance decline also show a broad market participation. And the new high, new low continue to show strength. The number of new high outnumber the new low. Now, although the AD line in the Nasdaq market is trending up, but we're still seeing this huge negative divergence between the Nasdaq 100 and the cumulative AD line. So this negative divergence is still unresolved. Now, let's take a look at the 11th sector in the S&P 500. Starting with the XLK, the technology sector, we noticed that recently it got a little bit of an underperformance, but the overall trend is still outperformed. And also the healthcare is continued to be underperformed. And the discretionary, we did see a little bit underperforming last week, but it seems like it is coming up, showing some outperformance recently. And also the financial, we got a little bit of a pullback on the performance last week, but the overall trend seems to be coming up to be outperformed. And the communication, it's looked like it is, trying to roll over, and we could see this turn into a underperformer here pretty soon if it's continue. Now, for the industrial, we did see some outperformance recently, but last week it did underperform a little bit. And for the stable consumer stable is also underperformed, similarly for the energy and real estate. It was outperformed the recent week, except for last week. We see a little bit of an underperformance, but overall trend it seems to be coming up to the outperform. And also the material is kind of flat, and the utility continue to be underperformed. And looking at some other sector, we see the semiconductor is outperformed, but showing a bit of underperformance last week. The oil was continue to underperform, and the oil exploration is also underperformed. Now, the retailer is showing some outperformance here, so it is showing outperform. So is the biotech and also the miners. The bank and also the regional, it has been outperformed, but last week it did underperform a little bit. But the home builder continued to outperform, and the long-term bonds showing a little bit of outperformance, but it did pull back a little bit underperformed last week. And looking at the 10-year versus the 2-year yield curve here, we see that it is still inverted, and it is sitting at minus 0.426. And also the 10-year versus 3-month, it is still inverted and sitting at minus 1.481. So I couldn't find anywhere in this chart that showed me there was a soft landing. And the reason why is that there hasn't been any soft landing. So do you believe that we're going to see a soft landing? Comment below. The 10-year yield fell below the 4% and sitting at this 3.9%. Right now, the dollar did not hold the bounce off at the 102 level. So unless it could come back up to this 102, I'm looking at this dollar could come down to test this level somewhere near the 100.81 area. And also looking at the dollar future here, we see that we did print a hammer candle on Friday, and that could be due to maybe some of the short is taking some profit off the table over the holiday. So the support and resistance is still be looking at this level here, 102.50 and the 100.40. So those are the areas that I'd be watching the dollar to see would it be able to break above or hold, this 100.40 level. Now, we did see oil come up and test this 75 level last week. So the question is, will it come back down and test this 67 once again? Now, the key here is to watch this composite point of control near the 76 level. If it could get above this composite point of control, then I believe that it could work itself back up to this 85 area. But if it remain below this composite point of control, then yeah, we could see oil come back down and possibly test this 67 area. So the key level to watch is the composite point of control for the coming week, somewhere around this 75.69. Now we see silver continue to move higher, and it was able to stay above this composite point of control above the 24 level. So we're going to be watching to see will silver continue to move up to this 26 area if it could stay above this 24 level, stay above the composite point of control. If it dipped below the composite point of control, then we could see silver possibly come back down to this 22.40 area. And gold is continuing to move toward this upper edge of this balance area. I'm still looking for gold to make a new all-time high and come up to this 2,300 level. Now let's take a look at the indexes, starting with the NASDAQ 100. We see the NASDAQ 100 made a new all-time high last week and also been up 8 consecutive weeks. So the key thing is, will it continue to move up and break this 17,000 level? So we're going to wait and see what the S&P 500 will do. And the Russell 2000 broke out of this balance area here, and we'll be looking for the Russell 2000, see would it be able to make its way back up toward this 80% extension of this balance area up near the 2,300 level. So watch for the possibility of dipping back into this balance area. And if it does, then essentially it is making a look above and fail. And that could bring the Russell 2000 to retrace back down to the lower edge of this balance area, pretty much similar to this move here and the recent move over here. And the Dow Jones Transportation is continuing to move toward this 16,730 area. So we're going to be watching this area when the transportation come up here and see what kind of price reaction we will see. Would it be able to break above and try to move toward the all-time high, or get rejected like the last two times and retrace back down to this 13,460. Here, the Dow Jones Industrial made a new all-time high last week, and it printed a indecision type of weekly candle. So we want to see what this candle signify to us that it's going to be a little bit of a pullback and come back down to test the old all-time high, or will it continue to push up? And the next round number that we'll be watching will be the 38,000 level for the Dow Jones Industrial. The New York Stock Exchange Composite is getting closer to the 17,000 level. So this index been moving up. And that is a sign that telling us that there's been a broad market participation on a recent up move. So that's a positive sign. And look at the S&P 500 once again on the weekly chart here. We notice that it has been up a consecutive week. And it is getting closer to the all-time high. It's only about 68 points or so from the all-time high. Now, the market was pricing in last week for the S&P 500 not to make a new all-time high. And you notice that it came up a couple of times on this upper range, and it got rejected, and it got rejected hard on Wednesday, that liquidation break. Now, on Friday, when it came back up, it also got rejected once again. So keep an eye on this. There could be a possibility of maybe a little bit of a rejection and come back down to test this Wednesday low. So for the coming week, the market is actually pricing in a potential test of the all-time high here, and that could set up a nice battle between the bulls and the bear. And my guess is the bull will probably push it up to the new all-time high if the bear is unable to hold it down and keep it from reaching up to this upper range for this coming week. And the upper range for this week is between 48.20 and 48.06.60. And the lower range is between 47.02.70 and 46.87.50. Now, notice that the lower range is near the last Wednesday liquidation low. And that tells us that this low will likely get tested. And also the other thing is we see that the last two candles is basically closing inside of this engulfing candle, this Wednesday liquidation break engulfing candle. So watch for a possible fake out that will break this high of the Wednesday's candle and then come back down and pull back down to the lower range of the expected move. Now remember, this week is going to be a low volume week most likely, and low volume could cause wild swings. So be careful. And here's the market profile chart for the E-mini S&P 500. You can see it has repaired most of the poor structure from Wednesday, except a couple, single print. It still have to repair down here near the 47.55 area. And in addition to that, on last Friday, we saw a poor high and also Wednesday poor high. Those poor high need to be resolved. So we could see an upward price move up here to resolve these poor high before we see a pullback and possibly come down and repair or completely fill this single print and come down to the single print down here in the mid-December timeframe, left behind in December 13th. So I'll be watching for potential pullback from the low, into these low volume zone here. Between 47.40 and 47.10, and also this gap zone here between 46.60 and 46.20. Now let's take a look at the ETF for the indexes, starting with the diamond ETF for the Dow Jones Industrial. We notice that it did not pull back and test the old all-time high, but it did get rejected from the upper range here. See that liquidation break on Wednesday. So for the coming week, the upper range is between 379 and 377.70, and the lower range is between 369.90 and 368.70. So again, the market is pricing in a retest of the old all-time high, and that's where the lower range is. So pay attention for possible pullback. Do not get FOMO into chasing this thing into all-time high. Now, we did see the diamond print an indecision weekly candle here. So, and also it's been up for 8 consecutive weeks. So beware of potential pullback here. And for the SPY, we're looking for a possible pullback from this evening star, which we did not get. Instead, we got a liquidation break on Wednesday after it made a couple attempts into the upper range, and it was unable to move to it. So it did find some acceptance, additional acceptance here between this 473 and 478 area. So for the coming week, we are looking at the upper range between 480 and 479, and the lower range between 468.40 and 466.70. Now, I'd be more watchful for the break below the lower range here than a move up to the upper range. Because with the lack of volume, we could easily see it move back down into this 465 area, this low volume area. So be careful. We are still looking at the possibility of this Wednesday low, the liquidation low, to get tested. Now, looking at the Q, the ETF for the NASDAQ 100, we did see it extended, beyond this 1x of the this balance area here, this 1x extension. And it did get a liquidation break along with the S&P 500 on Wednesday. It did come up near the upper range, but it did not went inside of the upper range last week. And for the coming week, the upper range is between 415.50 and 414, and the lower range is between 402.70 and 401. Now, the market is pricing in the upper range up here near this 1.27 extension, or this major move, the 1.27 of this balance area. So we could see this upper range to be in play if it come up to this 1.27 extension. Now, if it come back down, then basically it's also pricing in a retest of the 80% level, or the 80% extension of this balance area. So for the week, just watch these ranges here, the upper and the lower range for potential target. We see the IWM close near this volume dent here, near the 203.73, and has broken out from this balance area. And the market is pricing in a possible pullback to the balance area because the lower range is set at between 196.90 and 195.80. The upper range is between 207.50 and 206. So the expectation is that IWM will likely chop between this upper edge of the balance area and this 203.72. Final note, we saw the Dow Jones Industrial all-time high got confirmed by the NASDAQ 100 last week. The S&P 500 is still about 64 points away from making its all-time high. So other than the Dow Jones Industrial, the S&P 500, and the NASDAQ 100, all the other indexes are still a little distant away from its all-time high. So do I believe the S&P 500 will make a new all-time high? Yes, I do, and here's why. Look at this home builder, the home builder ETF XHB. It is still hovering near the all-time high here. That is remarkable, with a mortgage rate somewhere around 7%, and we see that people are still buying homes. And the other thing is, look at this breakout from the consumer discretionary. See that it broke out of this downtrend. Right now, it's continuing to move up. And I wouldn't be surprised to see it come up to this 186.63, this composite volume profile value area high. And here's the retailer. You see the retailer got a nice bounce off of this low here at the 57.50 area. And right now it's getting close to this upper edge of this consolidation area near 76.25. So I wouldn't be surprised to see this come up and possibly even break above the 76.25 if in the coming days we get some positive Christmas shopping numbers here. So right now, all indication is the consumer being out shopping, and based on the last consumer sentiment report, the sentiment has not been as high for the last 5 years. So that is showing some positive consumer sentiment here, and also that could bring in a lot of consumer spending. So we'll see how those numbers come in during the Christmas shopping season here in the coming days. And that could bring up this 9 consecutive up week in the last 10 years. And that would be unprecedented because I have not seen a 9 consecutive up week in the last 10 years. Now, I did not go back any further because 10 years is long enough for me. I don't need to go back 20 or 30 years or whatever. But, for the last 10 years, we only recently saw, 2 times that had been up 8 consecutive week, which was last week. And now we could see a unprecedented first time 9 consecutive up week for the S&P 500. So we'll see if the S&P 500 makes a new all-time high next week. We could see a up week for 9 consecutive straight time, straight up week. Now here's what the option market is pricing in, and some of the price action we could be watching for is the 4,800 level. You see this call wall at 4,800 level. Now, if the price is able to push through this 4,800 on the S&P 500, then we could see it pushes up to the all-time high, which is somewhere near the 4818.42. Now, here is the logical pin, right? The most, or what we call the max pain type of pin, is that if it pin at 4,700 on Friday, then these, calls and the put get wiped out. All these calls up here get wiped out, and all these puts over here get wiped out. So keep an eye on the 4,800 and 4,700 level for next week. And here's the question that I posed on my Substack newsletter. Is this a bull trap or beginning of a major uptrend? We'll see, but I won't be surprised to see a new all-time high from the Dow Jones Industrial, the Nasdaq 100, and the S&P 500 before the current uptrend reverses. If you'd like to see additional content from me, go visit my newsletter at Substack, and the link is smtraderca.substack.com. And be sure to smash the thumbs up to help promote this video and subscribe to help grow this channel. Thank you for watching, and happy holiday.